All right, guys, so we are live. Let me just get a quick sound check from everyone and we'll get going. Sound okay for everybody? So make sure there's no audio issues. Good, good. All right, cool. So let's get into it. I'll go over a bunch of stuff here that I want to talk about, and then we'll just get into some questions after that. So as you can see in the corner of your screen here, Netflix is United's just came out, so I was waiting for that. So Netflix came out. They beat on earnings, and they matched revenue. They crushed earnings. 3.19 versus 2.56, but they really guided monster quarter four, so that is helping the stock a little bit. But as you can see after hours, we don't care about what the actual numbers are. We care what the market does. And look at this range here. Netflix always does this on earnings, but all the way up to 662.50 per minute there, which would have been a new all-time high, and now coming back in and stabilizing. We'll see where it opens tomorrow. United just came out here, so United popping all the way up to 48. So I don't know what the numbers are there yet, but we can continue to follow that, and we can go back on that if you guys want. But just wanted to have that up there for now. So I'm just going to get rid of that. But yeah, so Netflix reporting, United reporting. Some other companies, we had J&J. So J&J was up big this morning. Lamb Research reported as well. Bit of a muted reaction there. Let's see, Philip Morris. So they were down, 1.7 on the day. Not a horror show, but did come back in. This is a bit of a bearish pattern here. This is a nice inside bar there on Philip Morris. So market not liking Philip right now. And then we had PG as well. So PG got hammered, but came way off the lows. So not a terrible look there on PG. And then next week, obviously, we have the big ones reporting. The only thing that's keeping me from going long Visa, I would have gone long Visa yesterday. I love this weekly pattern here. Look at these three tails there, inside bar, perfect. Problem is they report earnings on Tuesday, and a stock like Visa is not going to move that much. A big move for Visa is like a couple of percentage points. So I don't see much upside between now and next Tuesday, and I wouldn't be willing to hold it in earnings because you never know what can happen. But Visa reporting next week, of course, all the FANG stocks. Tesla gapped up this morning, and I said I would consider shorting it if it gapped up, but it just didn't really, it gapped up to about, what was the open, 877.53. I would have liked to see a gap up to 890, closer to 900. I probably would have taken that as a short, maybe even just as a day trade, but just didn't get quite extended enough. It did come off the highs. Obviously, it finished red finally, but not a lot of volume there. It is into a lot of resistance, and it is really overbought. From a medium-term perspective and even a short-term perspective too. But, so Tesla coming back in finally. Apple having a nice day. Microsoft, we know, another all-time high for Microsoft. Google having a decent day as well. Facebook has gotten its butt off the canvas and finally, had a little bit of a rally here. It was a little oversold, though. Got right into that 200 moving average, so not a surprise to see Facebook bounce there. The NASDAQ 100 is into resistance, though. So you have this pivot high here, and you went right into that, and we're a little overbought going into that. So I think this resistance holds up, and you have this red bar here and this nice chop here where we initially sold off. There should be sellers coming in. Again, we talked about this yesterday, but this is your inside bar high on the weekly, and it doesn't mean that it happens right away. It's a weekly resistance. So maybe it rolls over tomorrow. Maybe it, takes a few days, but I do think it comes back in. We do see some selling pressure here. It is very common for FANG stocks to run into earnings and then sell the news kind of after that. So I think that's possibly what we're seeing a little bit here with the NQ. Spiders are holding up a little bit better. The S&P here, E-minis are having a really nice rebound here, and they're getting close to all-time highs. But if we look at last year, we basically did the same thing. Actually, you can see it better in the SPY. So we had the leg, first leg down, and then, made another leg down, and then up, and then just gap, gap, gap higher, and it was, oh, we're going back to all-time highs, buy the dip, blah, blah, bears are going to get wrecked, blah, 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 and then we just, we sold right back off. Now, we ended up making a higher low and going higher, but in the near term, if you're looking to long this market, I would not do it up here. Wait for a pullback, because, this is, you're late to the party if you're buying now. You want to be buying here when everybody was freaking out. But I do think we head lower. I do think we make another leg lower for what that's worth. And it doesn't mean the market can't hold up in the near term. Spiders are doing well. The diamond Dow Jones having a nice day. That is very close to all-time highs as well. The one area of weakness, though, the Russell, not really participating in this rally. Had a gap up, faded that, then had a nice little intraday rally, but came way off the highs there. And the Russell has been held, it's strange. So the Russell's made higher lows since July, and it's really held up well since September. So this was the September peak in the Russell, but then we made higher lows. And if we look at the, even just the S&P Spider, we made peaked out in September 2nd, and then lower lows. And now it's outperforming a little bit, but so the Russell was outperforming relatively, and now it's kind of underperforming now that we've had this recent rally. So Russell acting a little bit weird here. And again, with higher yields, the Russell should be moving higher, but it's not. So this is something to watch. It's happened too many days in a row for it to be an outlier. Yields up, also yields up and tech up again. So this is a little strange here. One of them's lying. One of them is lying. So, and I think it's tech that's lying. So I think this is more of a counter trend bounce, and we're into. You can see this resistance right here on the triple Q, and then you have this little midline here, which is also a bit of a minor resistance area, but it's there. But this red bar there's going to be sellers there. We did get a little bit of selling intraday, and I mean a little bit. There was some comments out of the Atlanta Fed that the economy is headed towards a recession or it's basically noise, but there was a little bit of comments that got us off the highs. This market was basically anemic. Look at the volume here on the triple Q. Look at the volume on the Spider. This is a really docile market. And when that tells you there's not a lot of institutional traders in this. So the volume's declining with increasing price. So that it's not institutions buying this market right now. It's small money, it's retail traders, it's algos. They may have been covering shorts at the bottom, but they're not buying up here. So just be aware of that. Not to say it can't go higher, not to say we can't make a new nominal high, but just keep that in mind. So a few things I want to cover as well. We did get some movement in the meme stocks. So BlackBerry finished up 14%, was up almost 15%. That's a pretty good pop there for BlackBerry. It's hard to say if it could continue running. Anything can happen with these things. Wouldn't surprise me if it gaps up to about $12 and maybe comes back in tomorrow. But if it gaps over $12, it could probably run. There's a little bit of resistance around $13.50, and then $14. But with meme stocks, they can be irrational. We had so GME was up a little bit earlier today, came back in off the highs. AMC as well, and that really reversed and almost engulfed yesterday's candle. But their executives released some news about they're accepting Ethereum, Doge, and Bitcoin or something else as a payment. They're just trying their management is just trying to play on the meme. They're all in on them being a meme stock. So, they're going all in. They're trying to save their business, and hey, maybe it works. But as far as the chart is concerned, this thing did reverse off the highs. So there is a lot of pump and dump going on with that. And we'll talk about the SEC report because I got a rant on that for a little bit. We'll get into that a little bit later. I just want to cover a few things first. So the put call ratio, according to TradingView, So the put call ratio on TradingView, let me bear with me 1 second. I'm just looking at another screen. So October 5th was that's the day we put in the low. Sorry, October 4th was the day we put in the low on the S&P. October 5th, the put call ratio made it up to about, say, 0.8, very close to about 0.8. And it finished at 0.52 today. So a lot of bearishness has left this market. In fact, I'm just going to show you here 1 second. There we go. Just the SPX. So here's October 5th. And it's hard to get it exact, but it's right about 0.77, 0.8, somewhere around there in that range. And we're all the way down to 0.52. We were actually lower than that at one point today. So a lot of the bears have left the market. So this is a lot more neutral here. So that's something to consider. And I said that, I've been saying this for really since the top. The only thing that makes me less bearish is that there's too many bears. So that, and a lot of people were morons and shorting at the lows here. And that's why I said, like, hey, I would love to short this market, but we need a good bounce. I'm not going to short it. I'm not going to chase it at the lows when this is your max downside right now. And your upside is basically greater than your downside. I mean, or excuse me, your downside, which would be upside on the SPY, is greater than your potential downside. It doesn't make any sense. So, but yeah, a lot of the bears are coming out of the market a little bit. And speaking of kind of coinciding with that, VIX, look, I told you guys it's going lower. So we took out Friday's low today and we closed below that. We're at 15.7 now. So 1570 on the VIX. And it's hard to believe, right? The low on the year and the VIX, these three candles are actually fake prints, these tails right here. But the actual low on the VIX was 15, about 1507 there. And you look at where we are in the market. And excuse me, that was in July, I believe. Yeah, July 2nd. So we have to go all the way back to right there. There's July 2nd. We're higher on the spider, but we've come off the highs and we still haven't made new all-time highs, whereas the VIX is getting close to making a new year-to-date low. It's not that far off. I mean, it can seriously get there in one day easily from where it is now. So I've had a lot of people ask me about volatility. Can I inch into VXX? And I had some questions yesterday. I said, no, let it get a little bit lower. Now I think that you're in a range where if you want to add a starter position, and I mean a small position on VXX, I don't have a problem with it. But just be ready to accumulate that and possibly add to it. Oh, sorry about that. Still on TradingView. My bad. But essentially, so you can see here, this candle, these candles here are fake prints. They didn't actually happen. This right here on the this 1507 on the VIX was actually the low. So sorry about that, but you can see we're not very far away from it, and the VIX can get there in literally one day, just so everybody's aware. But yeah, if you want to open a starter position in VXX and with the intent to add to it, I don't have a problem with that here. Usually, before the market bottoms, there's some type of volatility spike. We never had that at the low here. So if you look at the VIX, we got down, so this is October 5th. We didn't even take out this high. We didn't even come close to it. October 5th, October 4th right here. And even last year, this is that time period last year. So September 2nd, September 3rd, September 4th. And then we got into November, and that's when we had the spike that took out this pivot high. So we never really got I just don't think that this is a bottom. I mean, why would we make a lower low twice when we haven't made a lower low since March 2020? This was your last lower low here. It's just all straight up. So you got one lower low in 18 months, and then you got another one about 2 weeks later. So I still think there's potential for some downside here. And then one little tidbit, I think I got just about every, oh, there's two things here. So pot stocks running nicely. I talked about this yesterday for patrons. And I said Aurora's got a good chance of running, tomorrow or this week, and it got a nice pop here. I wish we took this one, but nice move on Aurora. Really, the whole sector, that's a really good candle there on Tilray. Kronos as well, CGC. So the whole sector running on some news out of California about them legalizing some hemp products. But nice move on the pot stocks. I really like all of these long term, honestly. But nice move there. And then lastly, we'll talk about the dollar index. So just because I think this is interesting. So we got below, we got all the way down to 93.50, which would have taken out this inside bar, but they closed it back above that. So that's a bullish candle for the dollar. Now the weekly is still well intact. You got a lot lower to go to take out the weekly inside bar, which is the more dominant one. But it's worth noting that on the daily you held this one too. So dollar showing some bullishness there. So just wanted to point that out. And then lastly, before I get into your questions, I just want to talk about this SEC report. So basically, without explaining, basically put it in layman's terms, the SEC doesn't understand financial markets. I know, big shocker, but their conclusion is that GME was not the result of a gamma squeeze, and that in January, yes, there were big blocks that went off of shorts covering that caused price spikes, but they concluded that the majority of the trading volume during this period was done, in smaller blocks, like essentially, 1,000 shares, 2,000 shares here. Now, the problem with that is, and I'm not going to name names because I don't want to get into fights or anything, and I don't want to pick a fight with anybody or really call anyone out, but I think it's disingenuous. It's either disingenuous or ignorant for some of these people who are saying oh, you see, that means that the retail traders, they really did it. They're the reason why GME ran. It's not because of a gamma squeeze. It's not because of institutions. That's the most insane thing ever. Have you ever heard of high frequency traders? Have you ever heard of algos? This kind of volume cannot be done by 200 million shares in one day. 200 million. Let's just say the average price of GameStop at this time is, so the low was 42, the high was 76. So let's just do it. 76 minus 42, 34, 2. So let's say the average price is 63. So let's times that by 200 million. So $12.6 billion worth of GME was traded. Nobody in their basement can come up with that kind of money. Otherwise, this stuff would happen all the time. So it's disingenuous, and it's either disingenuous or ignorant to think that retail investors are or were the real cause of this. I mean, maybe they had a hand in starting it, but algos and institutional algos with real money caused this. And yes, the short squeezing, the big blocks going off helped, but you're basically telling people, it's like you're telling somebody who's 5'2" and has a broken leg that they're going to be an NBA player. You can't. You're lying to people, and I don't like that. So I just wanted to cover that a little bit. But the SEC released that report, and I mean, it's as comical as anything the SEC's ever done. But anyways, I just wanted to rant on that a little bit, and I think that's about everything. So I'll get into some questions here. So I see there's a lot of them. Yeah, earnings on Netflix were good. I mean, not to pat my own back again, but I did that video earlier this year, and I said if there's one FANG stock that I had to own, I'm not saying I want to own it, but if you held a gun to my head and said I had to pick one, it'd be Netflix, because look, it's the only one. Look at this 20-month moving average, and it was overbought, but look at that consolidation. That's beautiful, and it price caught up to the 20 MA, and now it's moving higher. But if you look at, well, even well, we'll get to Amazon in a second, but look at Apple. Look how extended it was even back in July and June. Nvidia, bloated pig. Look at how extended it was. Although it did catch up by March, it did have a nice little retrace there. Microsoft, look how extended this is from its 20-month moving average. Google, look, this is ridiculous. Facebook was a little bit better, but Netflix was the one that that was a nice chart there. Now the other one that I think might be a surprise to a lot of people is Amazon. So you've got a little monthly inside bar here. So here's your big bar. And you got a little inside bar there. And 20 MA is catching up. And you've had a nice consolidation. Yes, you were parabolic, you were overbought, but Amazon looks all right here. So that could be another thing in the near future. They got to fill this gap right now in the near term. And obviously they have earnings next week. A lot of that can change, and I'm not bullish tech right now, but the charts are the charts, and it doesn't mean there can't be outliers. But yeah, Netflix having a nice earnings report and guiding very high. Yeah, bears turning bull. Yeah, and that put call. You guys remember I've been saying this for months. I was like, I want the VIX to get crushed. After July, we were talking about these cycles. You guys remember I had some cycles that, some minor ones, May, before I was even with Jason, I had one around February and March, and they all played out. They all played out for a couple percentage points. I had one in the beginning of June, it kind of played out. And then this July one was the last big one. And then once that failed, it was like, all right, throw my arms up and we're just going to play. And that's why all through August, we were just picking up longs, Zoom, Snowflake. We picked up Peloton. Remember we did Clove. And we did pretty good on those. But that's why I was so hesitant to short. And I give the market makers and the institutions credit because they disguised this really well. Usually I can pick up on when we're seeing a top, and I had some sell signals there, but I wanted every breaker to be flipped essentially, because I had almost every breaker flipped here. I had almost every breaker flipped here. I had almost every breaker flipped here, except for one or two. And those one or two breakers that didn't flip essentially, in my opinion, are the reason why we were able to go higher. But I had one breaker that didn't flip here, and you guys probably know which one it is. It's the semis. And they held up okay. Look at, this is September 2nd. This is when the market topped, and the semis held up. And then they started to underperform, but they held up. And that's why I didn't want to get too aggressive on the sell side, and we missed this move. And again, there was too many bears in the market. The VIX was elevated. I just didn't like it. Now we've shaken some bears out because you got them excited. Nice little dip. Now they're all, yeah, here we go. It's going to happen. And now you got this ABC move up, but we're extended here. We're a little overbought. The put call ratio. So there's several different put call ratios, and this is like a problem. And I have not figured out the answer to this. And I don't know if you guys know Helen Meiser, but she goes off the SIBO. Like you can go off the SIBO market statistics. Hold on one second. Pull it up here. There we go. So this is the SIBO's put call ratio. So this is about as official as it gets. They haven't updated it for today, I don't think. This is yesterday, but so you've got this one, and then there's TradingView. So TradingView's got this put call ratio. And then if you go back to Thinkorswim, there's this one. And this one typically reads the lowest. You're seeing 0.46, and the TradingView is at 0.52. I don't know what SIBOs will be at yet. It'll probably come out some point later today, but it's usually the highest one. And they're all different. And I haven't found anybody who can give me a clear answer on this. If anybody can, that'd be great. But it seems that there's different put call ratios on every platform. And I don't know if some of them track shorter term, um, you know, options activity, and some of them are more medium term based, or what, there's averaged out or something. But you'd think that there'd be a universal one that everybody knows and goes off of, right? Like there's, you know, like there's the, S&P 500, there's the SPX, and then there's the SPY, and there's the futures, but everybody knows the difference between all of them. And I can't figure out, I've never heard from anybody, even like, official traders that have like Bloomberg terminals can't tell me the difference between those put call ratios. So it's a weird one, but yeah, I'm going off of the one on TradingView because that's the one I find to be pretty consistent. So VIX, the VIXI, I don't really follow the VIXI. This is an ETN or ETF. Hold on one second. Give me one second. I'm just pulling this up. So it's an ETF. So basically, so the VIXI is going to track short-term VIX futures, but there's slippage just like there is in VXX. The VXX is more averaged out towards like medium term, and the VIX itself tracks the front contract typically. And then you have the VX futures, which is the front contract. So this is October 21, and you can see that that's getting smoked right now. So VIX futures getting whacked, but the VIXI, and then there's I believe VXM. There's another one. One second. VIXM. That's it. So this is a medium term VIX future, but they're all. I mean, this one's a little bit more stable because it's tracking medium term futures, but it's not going to pop nearly as much. But and then a lot of people trade like UVXY. This one's a little too volatile for me, but yeah, basically the difference is this is going to track shorter term futures on the VIX, but it does have slippage. So just be advised of that. I mean, but the thing, so you're holding that starter position. The thing with the VXX though, the beauty of it is that as long as you keep your average within about 20% of price of the current VIX, it's going to pay you out. So you just got to average in strategically. Yeah, from 2 weeks ago. So if you were at around 27 even, you could add, I mean, if it heads lower, which it probably will, let's say you add at 21, you double your position. I mean, so you got an average of 24. And all it takes is one day like this, and you're not only in the money, but you're up 10, 15%. So XOP is a tough one, Elliot. I wanted to be bearish on oil for a long time. You guys know that I've been, I pretty much like called this correction pretty closely. And I knew that this was a bear rally here, but I thought that we'd come down, we'd probably get a bounce around the 200. And I thought that we would come up, make a lower high. And I thought we'd at least get to 57, possibly to 53. But crude just doesn't want to go down. And I mean, we're on the cusp of an energy crisis right now. That's just the nature of it. Now, I forgot. I want to talk about nat gas. Nat gas, but I told you guys it would probably bounce at the 50. You got that $5 even number pierce. You have this pivot, this turnaround here. So it should get a nice bounce off of that. But the level is lower. There is a lower level that I like a lot more. And patrons know about that from yesterday. But that's what we're looking for. We'll probably get a nice bounce here. By the way, it's a little premature, but if we do get a bounce, and let's say we reject a 20 MA, you could end up putting in a head and shoulders here. So it's premature. We're not going to like say that's going to happen just yet, but it's definitely a possibility. But yeah, nat gas coming back in a little bit, but crude has just been a powerhouse. So I have short-term, my short-term target would be probably about 85. So you see this broadening pattern here. Actually, we can just go farther out. See this broadening pattern, so 85, and then bigger than that, you've got an even bigger broadening pattern that would take you up to 90. But yeah, I don't have any sell signal on crude right now. If I get one, we could look to play it, but I don't have anything that makes me want to short oil right now. Oh, BITO. That's right. Thank you for reminding me, Fareed. Yeah, so not really much to go off of here, obviously. Just one day here. We look at the intraday. Had a typical gap. Oh, look at this pump and dump. This is ridiculous. And then sold off. Dip was bought. So it is tracking the price of Bitcoin. So that's good. It's tracking it well. So this is, yeah, that's pretty good. Yeah, pretty accurate tracking there. We'll have to see a few more. We'll have to see after a couple of weeks if it can track the price better than Grayscale, which it probably should. Grayscale really sucks at tracking the price. I remember when we had that big dump out, I was going to go long Grayscale just because I didn't have time to like move money into my crypto account. And I was about to put my order in at about 28 or just under $28 and it just didn't fill. But anyways, if you look at this, oops. If you look at Grayscale, so the low on the 19th was 28 and the high was 33.84. But Bitcoin futures, the low was 30,000 and we closed at 38. And actually the next day we got all the way up to 42. And on Grayscale, I mean, it's just, I don't want to do the math right now, but it's basically, you're giving back like 5–10% just to own Grayscale. It's not a good vehicle to trade Bitcoin with. But yeah, hopefully this ETF is a little bit better than that. But I mean, I'm sure you guys saw my video over the weekend. This is not something you want to own. It's just a trading vehicle. But Bitcoin, the dip was bought this morning. And it's almost in the double top now, but I mean, could it rip this top off and go straight to 100,000? Yeah, yep. But wouldn't it be the most epic pump and dump ever if it got above 65,000 and then they just dumped this thing right after the ETF launched? So I don't really want anything to do with Bitcoin right now. From a shorter term perspective, from a trader's perspective. But let's see. As far as uranium, yeah, let's look at CCJ. Yeah, it's in a double top. I wouldn't, man. If you have no exposure to it, I would just say, honestly, yeah, just wait for a pullback. And I can say that because, but you know what though, you got a pullback. This was your pullback to buy, just FYI. It is a little extended, but so you might not get another one. But let me just show you something. I was telling people back in 2020, like, let's not chase Wheaton here. It's had a really nice parabolic move, but it's parabolic. You don't want to chase it. You can even, like, this was a good pullback to buy. And it got all the way up to 55, 57. But look where it is now, 41. So I'm not saying that's what happens to uranium, but just, just don't chase anything. Just wait for a good pullback or a consolidation. But this doesn't look like this isn't typically what happens when an equity breaks out. So when you get up to this kind of high and you pull back, usually you want to see a lot more backing and filling before you attack double top again. Now, I'm not saying it can't really squeeze and go a lot higher. URA doing the same thing, URNM, Denison. Denison's chart actually looks a lot better. You have kind of like a cup and handle here. But I just can't chase. It's just not in my... I've worked a long time to train myself to be disciplined enough not to chase things. But I mean, look at the long-term chart of Denison here. Like, if your perspective is the next decade and you don't have any exposure, I mean, like, it's probably not going to hurt you to open a small position here. But just know that you're chasing it while it's already in an uptrend, essentially. And it's not insignificant because, let's say 1.4. So let's say if you got in at Denison at 1.4 versus 1.8, and your all-time high is 15. 15 divided by 1.8 is 8.3. So you got 8.3x. 15 divided by 1.4 is 10.7x. So that's 200% that you're 250% that you're leaving on the table by chasing it here over the long term. And then URNN, so thank you for reminding me about that. So this is funny. I didn't even recognize the ticker when you first brought it up, but I had look at how I had this wedge pattern apparently on here from a while ago, and looks like you broke out of that. So I remember being somewhat bullish on tankers at one point because of the problems with oil and it not being able to be stored. And yeah, I broke out of that wedge there. But you're going into a lot of resistance. There's a lot of resistance up here, and you're extended already. So if you want to own this, wait for a pullback. Probably wants to get, if it pulls back, it probably wants to test $10. This is the top, then you would say this is like the 382, yeah, $10. But I mean, this might not be the top because it's, it finished at a high. But I would wait for it to pull back though. But yeah, thanks for bringing that up though. I forgot about this one. But look at that wedge though. Nice falling wedge there. Breakout, little back test, and then off to the race. He made another new low here, but then off to the races there. Nice chart. I have to look at November seasonality again, but there's certain years where that's different though. I'd have to look into that more though. I'll come back to me on that one. Not today, but I'll look into that later tonight. But I'm also looking at like really long-term cycles right now too, so there's a little bit of a difference here. Yeah, I don't know about 2 times leverage to Bitcoin. Like, Bitcoin's already volatile enough. I mean, yeah, I'm not saying we don't see it, but you remember when Volmageddon happened? In fact, you can't even go back to look at VXX. The farthest it goes back is to 2018 because they had to redo this ETF. Same thing with UVXY because of Volmageddon. So imagine there's an event where we have, one of these on Bitcoin where it does this, and you've got 3x short Bitcoin ETFs, like the SQQQ of Bitcoin, and it's causing margin calls and all sorts of stuff. I think that would cause some serious problems. But yeah, I mean, the crypto is already volatile enough. Not saying they don't actually somehow do this, but I mean, this market is just, this market needs so much deleveraging. It's not even funny. I'm not saying it happens. I mean, I hope it does, but it's just the crypto traders and the meme accounts and the people quitting their jobs to become quote unquote day traders. Like, these people have never seen a bear market. They think that this is a bear market. Like, they think that this is a correction. It's not even a correction. It's just a pullback. Um, like, they would not survive. They would not survive 2007, 2008. You know, they would not survive any of the any of the. I mean, before 2009, there was such things as risk. Uh, Worth keeping an eye on here. So take a look at this SPX. So we had this engulfing reversal, and we're getting up there, but we'll see where we close the month. So we've got to keep an eye on that. If that holds and we pull back off of that, no, just be careful here. Industrial. I mean, it should. Yeah, it should be driving silver higher. Everything else. If you look at the price of tin. Um, just 1 second. I know this chart's kind of sloppy, but because it's such a thin market. But I mean, look at the price of tin right now. So 15,000 to 30. It's 100% since June. But there's all sorts of what's it? Coal is up huge. I mean, there's all sorts of just commodity inflation. You'd think that industrial demand would drive silver because silver is in everything right now. But you know, there's the commodities paper market, and you know, we all know how that works. But I do kind of like silver here near term. Did get a little bit of a premature pop. There's some good resistance in this area, and we played this. We played AG long on Patreon with the patrons, and we stole money from this. And I say stole because we got out here and we took a little bit of a hit on the second half of the position, but look what happened afterwards. I mean, we look like geniuses for selling it where we did, but I wouldn't be against getting back into this, maybe SILJ. And speaking of the miners, GDX. So you guys remember the last couple of months I've been talking about one of the reasons why I think gold has been so soft and I'm not bullish is because the miners have been really weak. GDX has been lagging. GDXJ has been lagging, but right now, that's a good little move. GDXJ especially. If this starts to go sideways here underneath that 100, it can go up there and attack that 46, 47 level. But the miners starting to lead the metal is a bullish sign. If you look back in March, so you see where gold was, where it bottomed out on the 8th. But GDX actually bottomed out before that on the 3rd. So the miners were a leading indicator there. And so to see them holding up is good, you know, is a good sign. But I am intrigued by this SILJ and AG, and I think silver's holding up well. I wanted to get into platinum via PPLT, but I thought it was going to have to do a little bit more backing and filling to get through this, and it just, you know, to its credit, it ran up pretty nicely. But this is going to be some resistance here for platinum, but nice pattern there on platinum. I told you guys this is a bottom. That's as clear of a bottom as you're ever going to see. Look at that weekly candle. That's it right there. But it's got a lot, I mean, it's got some resistance up here at about 1080, you know, this 50-week moving average with this breakdown area. But nice move there for platinum. And palladium, this was really oversold, but nice pop off the lows and getting a decent pop today. But, you know, gold struggling again. Big weekly level. If you can close above 1810, 1810.60, gold can go a lot higher. But right now it's very weak. It's actually the weakest precious metal right now. And I do think the dollar index is, I mean, look at that. It's a bullish. That's bullish. Inside bar, pullback. You had a test candle and you bounced off the lows. Look at the weekly, starting to bull flag there. Moving averages, trend is starting to change back up. So, and there has been times throughout history where gold can move up with the dollar. You know, if we get a fear event, that can happen. But historically, those are short-lived. But you know, let's take it one step at a time. But I do like the I do like the action in the miners, though. Goldman is warning on the broader indexes. Oh, so we should probably go long then. Let's see, ZIM, integrated shipping services. This is a shipping company. I don't know much about this name. It looks like it's a new issue too. Yep. So you did one thing good. I like this. So you went back and back tested this previous level. So this is your all-time high before. You couldn't get through that. Had a major reversal, came up, couldn't get through it again. Then you broke out. So now you're back testing that, and you have 100 moving average right below it as support. And then you put in this kind of bear flag here. But guess what? You had an inside bar, and the high was 47.47. And you obviously took that out today. So that's a failed pattern. You do have a little bit of resistance at gap fill and 50 MA, but if this gives you, so this is what I would do if you want to long it, Isaac. Let it give you pattern. If it consolidate for a few days, then go long, and you can put your stop as you can make your stop as a close below 46.50, or if you want to give it a little bit more leeway, you can do this low here, 42.12. But that's how I would play that. But yeah, that could have a good, you know, that's a failed bearish inside bar. You know, some of the best trades come off of failed patterns. So that's nice little find there. By the way, speaking of inside bar, I don't know if any of you got in on Peloton today, but that's a nice bullish candle there. You had a close below or a close above the 20. I'm just kicking myself about this. I even put this, I think I did this on the live stream with you guys, but I was like, yeah, this is the buy area if Peloton gets down there. And it got down there. It just wasn't on my radar at the time. And then, of course, it puts in an inside bar. It gets a pop yesterday. Nice little retrace. I thought about picking it up today, but I just don't want to overexpose myself on the long side right now, or really to any side. If it was back here where we're just going straight up, I would totally have no problem with jumping on Peloton. I would have easily pulled the trigger on Tiger yesterday. I told you guys about this one. This thing gapped up, was up 8% today. I thought about picking it up into the close yesterday, but I didn't want to overexpose long. And this is a higher risk name, but yeah, nice little move there on Peloton. But yeah, I like that ZIM. Not bad. Let's see. Yeah, I mean, it could last 18 to 12 months, or it could last 10 years. The only thing is with, is there another like Fukushima event? But I don't see how they can keep pushing green energy and have all these problems and not look to nuke. Now, a lot of governments don't like nuclear energy, but we'll see. There's a lot of geopolitical risk involved in it, so that's your major risk in investing in uranium. But I just looking at just knowing how the charts work. And I did a video on this before. Like this bear market is over with. Like that is a textbook low. It's textbook capitulation. You're just in a downtrend forever, and you just kind of grind. You're slowly grinding lower, and then all of a sudden you have a massive capitulation at the end and a reversal. Look at the volume here. There's a lot of real buyers in here. So yeah, maybe it only lasts a few years. I mean, there's going to be a lot of resistance up here. There's a lot of areas of resistance on the way up, but I think there's definitely a lot of value in it, though, if you want to play it from that perspective. September 2nd through 21st was the greatest bear market in the last 12 months. Yeah. The last 18 months, really. You know, that's where I came up with that cycle from, the 14th. And I liked it. I just wish that we had traded. I wish that we had traded straight up. No, I wish we had just done one of these into the middle of September. I would have absolutely picked up VXX, SDS, probably QID. But I mean, we would have been heavily short if that happened, and we just didn't really get there. But yeah, it's true. I mean, like, what's this? 5%, 454, 426. %, just over 6%. Yeah. Qs went a lot lower. Qs actually topped out on the first. The 382, 350. Yeah, 8.5%. But that's what yields do. And we got to keep an eye on. This is not normal, guys. The yield rising and the Russell lagging with the Qs rising. Now it's probably just I mean, it was oversold, so it should, we're not surprised that it's bouncing. But yields were also kind of overbought, so you'd think that yields would at least be backing and filling as the Qs are rising, and that's not happening. So something stinks here. Something stinks right now. Everyone's buying uranium because North Korea. I don't think that's the reason. Yeah, Jay, yeah, I would have, believe me, I was itching to do it, but the thing is, I had good cycles that all triggered pretty much all year long, and they amounted to 3% or 2% or 1.8% or something like that. And after July, I was like, okay, well, you know what? Until we get a major sell signal, we're just going to be neutral and try to play the trend as long as it rides out. So we were picking up longs and just, not getting too exposed. But I mean, you guys know, like I've been in Patreon, we haven't been really committing a lot of capital. A lot of the positions we take, a couple of percentage points here, a couple of percentage points there. We're not picking up a full 10% position to start. We're picking up small positions because ever since here, I just went into caution mode. I was like, okay, well, it's overbought, it's extended, but I don't have a sell signal, so I'm going to ride the trend as long as it will last. But at any day, we could get a massive reversal. So that's the way I was playing it, and that's the way I'm still playing it because we're still in a choppy period. But once the trend establishes itself, if we get a reversal, like a good reversal on volume, I'm pretty good at knowing if and when the top is in, if that happens, but we'd have to see what it looks like. But then we can get more aggressive. And if something happens to make me think that we're going to continue higher for a sustained period of time, I mean, we could make a new nominal high, and that wouldn't necessarily change my bearish outlook, honestly. But if something happens that something were to happen that would change that, well, then we'll start getting more aggressive on the long side. So, but we've done really well by being cautious, and we've actually beaten the market by being cautious. So we're just kind of taking it one step at a time here. Yeah, I think Stanley, I think that's kind of what I'm looking at. Um, unless we get some major geopolitical news, this market probably holds up into earnings. I mean, they're not going to sell the market off, a few days before earnings week, it's just not how things work. Unless, again, unless there was some type of major news event that happened. By the way, Evergrande, apparently they are going to get enough liquidity from Beijing to be solvent for a while. That really wasn't plastered all over the news like I thought it would be, but so that's something. I mean, I don't think that was really going to be any sort of domino. Even if they defaulted, we probably would have had a knee-jerk reaction, but I mean, that stuff is so priced in at this point. The problem with Evergrande and China is contagion. There's a lot of other little Evergrandes that nobody knows about, and no one's really talking about them, but they're there. So that could be the next thing on the table. But yeah, the dollarizing taper talk. I mean, I don't have any faith in the Fed actually doing anything significant, but I will say that everyone knows. I mean, I don't care how much of you could be the biggest perma bull, wide-eyed perma bull in the whole world, and you know that there's going to be another crisis that it's just going to happen because of how fragile our financial system is. Well, what if it happens when we're doing 120 billion a month in QE and we have interest rates at zero? Doesn't that incentivize the Fed to maybe raise rates by even just 25 BP? So that way they have that bullet, or maybe they taper by just 10 billion a month so that they have those bullets in their chest. What are they going to do? Go up to 240 billion if we have a major crisis? I mean, I'm not saying they wouldn't, but careful. Yeah, like, did you get what price did you get in at Peloton at? I mean, I thought about picking it up today, but it had a nice little dip this morning and had a really strong close. I'm sorry. Yeah, I meant to get back to you on the Oracle. So yeah, and Target. Thanks for reminding me. Oracle is a bloated pig. It's a little short-term overbought, but I wouldn't short this. The best thing I could say is maybe buy put options on it if you wanted to play it to the downside. Buy long-dated puts. That way you know exactly what your downside is. I mean, it is a bloated pig, but there's nothing, it's not straight up. It's not parabolic. On the larger time frames, it probably is. And you got back to that 20 MA on the weekly, so there's a nice bounce there. The monthly is parabolic. So this is definitely unsustainable. But if you want, I mean, it's probably going to want to go up and hit $100 at least. That's just kind of the natural flow of things. It'll probably want to get to 100. But I would play this with puts if you want to play it to the downside, because that way at least you know your risk. But yeah, I mean, there's a lot of names that are absurdly overbought. SE, this is the biggest pig in the whole market, in my opinion. But Target's another one. I did have a nice little pullback. Let me see. Let's pull this back. And I tweeted about Target like a couple months ago, I think. And I was joking about how, oh yeah, the best growth stock in the market. I mean Target. I mean this is how a growth stock trades, not a staple retailer. But this is, yeah, I mean, this is just absurdly overdone. But yeah, I had a nice pullback, and then there's, you know, a good snapback rally. That's a good rally there, but this could also be a bear rally. I don't know. It's hard to say if this is really topped, though. Already kind of got up into resistance today. Yeah, I mean, maybe this probably pulls back. I wouldn't, you know, I'm not too interested in going betting against this one. It could, I mean, it could be, this could be a nice top, but it's just so hard right now. Let's take a look at Crocs. Let's get rid of this fib. This one I think has topped because you finally made a lower low for the first time since March 2020. Nice little bear rally into that necktie. I think this one's done long term. You got in at 88, Peloton. All right, yeah. Just put a stop. Let's see, a 10% would be what, $89. Yeah, so just have a stop as a, just do a weekly close below 81.40. So that gives you less than 10% risk. And I mean, your target would be right about here. So 95, 96. And I would take half off at about 91 or 92, I think, 88. Yeah, at about 92 bucks, take half off your, trim your position and move your stop to break even. And then you can let the rest run to 95 or 100 if you want. Or at least move your stop to break even at 92, just because, you know, when you get about 4 or 5% in the money, you want to protect that. But yeah, it's nice little pattern there. I got no problem with that. Yeah, SE is the bloated pig of the stock market. That's, I wouldn't say it's the Amazon of it. I mean, it's and I say this all the time, it's a company that has basically no earnings, and it has a market cap. Oh, let me look it up here. We'll see how big it is now since it was up so much today. I think it's like 250 billion though. Oh no, it's only 200 billion. Only 200 billion. Whereas their peer, Electronic Arts, has a market cap of 39 billion. And they make billions of dollars a year. I mean, it's like the epitome of speculative bubble. I mean, I'm not saying this can't be a good company, but you know how long it would take to grow into that valuation they have? Like we're talking like 5 to 10 years. And that's what I tell people, you know, that, you know, like Tesla bulls and stuff like that. I'm not saying that Tesla can't be a good company, but you know how long it's going to take them to grow into that valuation? They'll say, oh, you know, Tesla's here to stay, you know, it's a staple. Okay, yeah, it's a staple. Great. It's here to stay. Is Verizon a staple? Yeah, sure is. Why isn't it taken out its 2000 top yet? What about Cisco? Cisco's a staple, right? What's Cisco done? What about Intel, the largest chip maker in the world? What's Intel doing? So just because something's here to stay doesn't mean it's going to be perpetually yielding 20% a year forever. Yeah, FTX, yeah. It got bludgeoned though. This is definitely topped out for a while though. Um, the problem with this is, well, first of all, if the market rolls over, this thing's toasted because we got a nice little support here at the 200 moving average, but let me show you something. This is the problem when you just go straight up like this forever, especially when you're just like a package company. Like, it's not like these guys are working on like cancer drugs or something. But you go straight up for this long, there's no support. You have to have a pullback so now that you can have a support area. But if this thing continues to roll over, it's got no support until basically 200. There's your previous pivot there. And if you get through that, you're going back to 175, 180. That's the problem when you just do this, is there's just no areas to stop the bleeding. But yeah, it may have put in a short-term bottom there. You got nice volume there on that bar off the low. So it's probably bottomed out in the near term. See ACAM. This is a chip company, right? See, you closed above 107.91. Wow, you closed 1 penny above this red bar high. So yeah, it could have some upside. So yeah, again, with this one, I would just watch for pattern if you want to long it. But it's going to have to consolidate to get through this 200 MA. And just be careful, because look at what's happening here. Trend is starting to go down. So unless it really reverses and gets a bid. Now the weekly is still okay, it's still holding up, but be careful with that one. But yeah, just look for if it gets a good pattern, you can jump on. Yeah, but Tesla sells government credits, and Tesla doesn't repair your vehicle, and they just tell you to get a new one when there's a problem. And they make chips, and Elon Musk is a genius, so you don't know what you're talking about, Fareed. So obviously I'm joking, but yeah, I mean, it's just ridiculous. GM, they have a bigger market cap than GM, Ford, and all the other automakers combined, and they're not even profitable, save environmental credits, which are probably expiring. Speaking of GM, that's not a bad pattern there. That's actually a pretty solid pattern there. 1, 2, 5, 6, 7. That's a good little look there on GM. You got some resistance up here, but let's see Ford. Yeah, kind of same kind of thing there. IRA, like your account IRA. Oh, and okay, yeah, and yeah, for FTX, yeah. Yeah, I mean, it's probably, I mean, it's definitely put in an interim bottom, and it may want to go, and if it consolidates, it may want to go up and attack that 235 area. If you close above that, I mean, then it could get up to the 50 MA, maybe to 250, optimistically. So the long bond, let's use TYX. And TYX has been weaker than the TNX, which is a 10-year. Hence why I wanted to, if we get the right pattern in yields, I'm going along PST and not TBT, because PST is a little bit more of a shorter term bond. But anyway, so what specifically were you looking for me to explain about the long bond, like how it affects the market, or like just yields in general affecting tech, or just yields in general affecting the market? Because if you want to know how yields affect tech stocks, that's You know, there's a difference between that and just affecting the market. Okay, so bonds. So the price of bonds is, okay, hold on. So we're looking at the TNX here. Basically, this is, if you just move the decimal point over one place, so 1.635 is the going yield on the 10-year US government treasury. Now, that's not the price of the bond. That's just what the yield is if you were to buy that, that bond. Now, the TYX is the 30-year. Obviously, you're getting a higher yield. Notice, you know, it would be 2.088 because you're giving the U.S. government your money for a longer period of time, and you know, inflation has to be taken into account, etc. Now, it's kind of tough to explain, but I'll try to do it here. So with yields, with higher yields, it typically puts pressure on tech. And essentially the thought process is if you have a higher yield, there's more risk going into tech than it would be going into bonds, or at least there's less of a difference in the risk because the yield is higher. Bonds down. Essentially, the reason why the Fed buys bonds is not only just because no one else will, but because it's forcing investors into stocks. So with a lower yield, where would you get? So if a bond only gives you a 2% yield, then where else would you go for your money? Where you know inflation is going to smoke that, you go into risk. You go into Q. So lower bond yields, you know, tend to help you. That's why gold typically underperforms when yields are higher, because you know gold is a stable asset, and it can often be outperformed by a lot of assets. And you know, look at the last 10 years. It's basically been flat or in a trading range. Well, if you were simply long yields, even if you were getting smoked by inflation, really up until 2019, you were still beating gold. Even though you were losing to inflation, if you just had like a simple bond portfolio, you still beat gold. Obviously, that's like, you know, selective investing, though. I mean, we're talking about if you invested in gold here to here, then you would have lost. But obviously, it's different if you got invested in 2008, you would have crushed bonds. But that's essentially the thought process. And there's a lot more that goes into it too. I'm probably not the best person to explain it, but you know, just like stocks, there's a lot of dynamics to what can affect the bond price. But I hope that kind of makes it a little bit clearer for you. So, but just in generally, the good thing, or the one thing to remember, is that you know a higher yield is going to be better for companies like energy stocks, XLE, XLF. That's why these names are doing so well. Another one that I'm finding intriguing is Lowe's. These home builders have done pretty well here. Actually, this is kind of broken out recently. XHB is actually in pretty good position here. But also a higher yield can mean the market is worried about inflation. It could also be that it's worried, a higher yield could be due to growth. And there's a distinction. So a higher yield is typically usually good for small caps because it means risk is on. But if the yield is rising because of inflation specifically and not growth, then it's bad for everything. So it gets a bit technical and a bit complicated, but I hope that was a little bit of a helpful analysis there. Yeah, BlackBerry. I wouldn't chase it though, because this could easily gap up to $12 and then reverse. But yeah, nice move though. They're like the thing with the meme stocks right now is they really get pump and dumped a lot. You know, AMC had a nice run here and then it came right back in. And look, it popped here and then it came back in. Then it popped today and it came back in. I still like GME. I still think GME's got a nice pattern here. I really like the weekly. I still think this has a chance to run to 225, but a lot of these stocks have been getting pumped and dumped lately. So, all right. Well, we've been going for over hour 15 now. Cool. Yeah, if anybody else has any specific questions, I'll answer them for you. Otherwise, we'll probably get going soon. But thanks so much for everybody coming out. It was had a much better turnout this time. It was a lot more interactive, so that was nice. I know when we do the patrons only streams, it's more a limited audience, but sometimes we do the public streams and get more viewers, so it's nice. You're welcome, Jay. Thank you. Let's see. Yeah, so United actually finished up nicely. Let's take a look here before we get out of here. So United, nice little top there, and it's holding those gains. Netflix is losing those gains for now, so interesting little action there. Pill grazer shit. David, did you are you the guy who used to live here? Then we talked about this a few months back. Okay, JB, I don't know the last time that you've been in Rochester, but if you're ever here, go to Dogtown. My uncle is the owner, and it's better than Nick Tahoe's. And I'm not just saying that because my uncle's the owner. I mean, the hot sauce is absolutely phenomenal. Yeah, that's right. Brockton. Yeah, okay, got you. Yeah, if you ever come out this way, go to Dogtown on Monroe. It'll blow your mind, seriously. All right, guys. Any more questions? Going once, going twice? All right, cool. All right, yeah, we're going to wrap it up here. Dogtown, Dogtown. It's on Monroe. They've got the. It's literally, it sounds ridiculous, but it's a gourmet hot dog place. There's like they'll put hot sauce, bacon, cheddar, all sorts of stuff, peppers, onions, everything. It's amazing. And the hot sauce is delicious too. Come check it out. We live in Brockport now. If you live in Brockport now, shoot me a message on Twitter. Maybe we'll link up sometime. But all right, okay. So, anyways, yeah, United getting a nice pop, holding those gains. Netflix not so much. We'll take a look at. We'll see what the market's doing tomorrow. We'll see if they. Oh, you live in Seattle. All right. Well, if you're ever out this way, come check it out. But yeah, we'll see what the market's doing tomorrow. Let's take a quick look at the futures. Oh yeah, they haven't opened up yet. They'll open up in about 10 minutes. But yeah, so NASDAQ in a resistance a little bit here. Again, it could probably maybe hold up a little bit longer. Maybe it goes sideways into the end of the week, and then we have earnings next week, and that'll be the big mover. But anyways, guys, take care. Thanks so much for coming out. Had a good time today, and I will talk to you tomorrow.